interest rates on a traditional bank, again, they're based on some external factors. A lot of times it's not even based on what the bank gets to decide, right? So for instance, the Fed sets up the interest rates. So the Federal Reserve, you don't know what that is. That's another entity that's not it's not an American company. It's like its own world bank. They decide what interest rates are in America, and then the banks have to charge on top of that. So what's happening now is because again, the Fed, again, this external entity which creates the money, they are the ones that printed up all this money and then they raised the interest rate. So now all the banks raise their interest rate. With decentralized finance, the old world is not connected to the new world as much. We did see one connection, and I'll go over it in a few. So the interest rates have nothing to do with what the Fed wants. So when all these interest rates were going up and up and up, the interest rates on decentralized finance stayed the same, at least from the platforms I teach people how to use, right? So I've kept the same interest rate, sub 3%, sometimes a little a little bit more than three, the entire time through the ups and downs of crypto, the ups and downs of uh banking failures and stuff like that. No up, not very little ups and downs, not like double, triple interest rates like what was happening in traditional finance because there's all these external factors that control it. Versus when the interest rates raise on decentralized platforms, we are the ones that decide that rating. And it's based on that interest rate. And it's based on the health of the platform, right? You don't want the platform to go out of business. So you got to understand sometimes there may be times where it's like, you know what? We should up this interest rate by a percentage to protect our platform because we're better off if this platform exists than if it didn't. Right. And again, I haven't even seen that happen yet. And crypto has gone through the ups and downs worse in history. And I still haven't seen it. So to me, I think we're pretty good there. Um, and then when you think about access to it, when we talk about traditional banks, America kind of leads the way, right? Like what just happened in America is starting to have a domino effect across the world. Decentralized finance is the whole world, right? So it's not like one country can set a domino effect. This is everybody who wants to use it around the world can use it because again, it's globally open source software. It's like nobody could stop you from using it. It's just code that lives on the internet. If you want to put your money in there and borrow against it, nobody could really stop you. So that's where traditional banks, there was a big problem with Silicon Valley Bank, right? Where any global business that was like coming from other countries that wanted to bank in America, especially startups, they were going to Silicon Valley Bank because they were much better at allowing them to do that. So again, when all this happened, all these external businesses were very worried about their money because that 250K for a startup is not that much. So they were almost screwed over. But again, if through a global open source software, they were able to have their money in a decentralized bank, they would have been okay. So again, once the world understands the difference between traditional and decentralized finance banks, I don't see how they compete. It's kinda like Uber and, the traditional cabs, right? Like, the traditional cabs, yes, before we knew about Uber or Lyft, they were the only option, right? But then, when you could just type your phone and it knew GPS where you were, it charged you didn't have to walk around with cash. It was better for everyone. It was better for the Uber driver, and it was better for the customer, and the cab companies quickly lost, market share because it was better for both sides. And this is what I believe is going to happen eventually. I know it's going to take some time because money is different than getting into a cab. People have much more emotional, um, have emotions based on the money. So they feel like I feel safe having my money in a bank. But this is where I believe we just had a real shock to that system. Now we understand how safe our money is in banks. Of course, if you have under 250,000, which is most people, you are somewhat safe. But I don't know. It's safe, but you're still gonna get the interest. I mean, the inflation of every time these banks go out of business or whatever happens, they're gonna charge us more to cover the cost. I don't see how this insurance is gonna cover every bank failure. A lot of banks fail throughout the years. The big difference that happened this last few weeks is that huge banks failed, like top 20 banks. And that's like there's of course thousands of banks across the world, but the top 20 banks, three of the top 20 banks in the world collapsed in the same week. And then one of the top, I think 10 almost collapsed, but a country had to bail them out, a different country. This is starting to get scary, right? So for me, when I create this content, I'm really trying to educate people on the differences. And then I want people to try just put a couple dollars so you can play with that system of decentralized finance and lose the fear of it. I think what happens is right now, of course, the banking industry wants to create fear around crypto and decentralized finance because guess what? It's like the cab companies, like, oh, Uber's dangerous, right? And that's where, you have to make your own decision based on your own research and understanding it. So at this point, we'll go over the sponsors. Um, First sponsor is retireyourbills.com, where we teach people how to create their own crypto banks and leverage them to pay their bills and invest. So what we do at Decentral Retire Your Bills is we help you take a bill and invest the same amount of money you pay that bill and pay that bill, right? So go to retireyourbills.com, take the free training so you can learn how to do that. Second sponsor is MetaBronx. MetaBronx is a startup accelerator that also brings you from the community and gives them paid apprenticeships at these startups that we help accelerate. The startups that have gone through our program have raised over $15 million after going through our program. And we are running a cohort right now. Applied if you are a startup founder and you're looking for understanding of how to raise money in the tech space. And then finally, Stack. Stack is the new sponsor. Stack is a program I've been developing for about 6 months now. Of course, I've been working on it in my mind for longer, but Stack is a way to automate investing and paying your bills. So basically, what I teach people how to do and retire your bills, I've created a software that will do it automatically for people. And we are testing with our public beta waitlist people. So if you want to get on the waitlist, go to stackit.ai and get on the waitlist. All right. So next, what role do cryptocurrencies play in decentralized finance, and how does that differ from traditional banks? Okay, so when you put your dollars into a traditional bank, you are basically taking the money you made, right? And that could be in the form of actual physical dollars or just a wire transfer from your company into your bank. But it's still very digital. Like I don't see many people walking around with dollars, right? Like yes, you could have a couple bucks in your wallet just in case, but people are not walking around with their thousands of dollars anymore or even hundreds of dollars like that often. I barely ever have cash on me. And I do think most people are in that same boat. So, what is the difference between cryptocurrency and dollars in a bank? They're they're both very similar because it is just digits. It's like, okay, $1,000 is in your bank account now. So you see this digital number in your bank, statement. But again, what did I tell you? If you went in, let's say you had $100,000 in your digital statement and you went in and you said, all right, I want my $100,000 today. You can't get that. Nobody can get that. Right. So, how different is that? Yeah, they're going to need a few days. They're going to get your money. They will get you your money. But again, depending on if there's a failure, right? If there's a failure, you may need to wait a few days more than normal. But if there's not a failure, you still got to wait a few days. No doubt about it. You're going to have to wait. With crypto, it is the same digital numbers, but where you keep that and depending on what are you doing with it, like if you have it staked in a platform that says you're staking it for a year, yeah, you can't take your money out. But if you have it in a decentralized bank or in just a wallet, you can get 100% of that money instantly, send it to wherever you want. This is where the problem lies, is when you take the money from the digital space of crypto and you try to use it in the real world. Right now you kind of have to go through some type of bank. There's options though, right? Like I teach people in retireyourbills.com, you can go through Coinbase. Coinbase has its own debit card, but there are limits, right? You can't spend $100,000 on the Coinbase card. At least I haven't seen. I think there's a like a daily limit, and it probably grows over time. You can send the money to your bank and create some type of wire transfer or payment. That's still going to take days, and this is where this is going to start changing. After we just saw what we saw, now we're learning, and the crypto space is starting to say we need to create our own banks, because the current version of the bank is kind of limiting what we can do, because we have to have our money in a bank, right? So what happens in the crypto world is, let's say we did that, had $100,000 in the crypto bank, and I wanna spend it. I have to send that 100,000 to a bank, and then that bank does what it does. So it slows me down. So what happened was, there were certain banks that sped up that process. They said, all right, USDC, keep the money in your bank account and we'll settle it faster for you because you have the money and we're in the same bank. So we're going to move that money faster for you because we understand crypto moves faster. But somehow, all of those banks were put out of business 2 weeks ago. So what they're saying in the crypto space is there's an concerted effort to go after what's called the on and off ramps of crypto. An on ramp is how you bring money into the system. An off ramp is how you bring money out of the system. So Signature Bank was one of the biggest ones that did this. Silvergate Bank was another one of the biggest banks that did this, and Silicon Valley Bank was one of the biggest banks that did this. So now, because this happened, the crypto space started to partner with even bigger banks that won't be able to get taken out like that. So I was just watching a video where the CEO of USDC partnered with BNY Mellon, which is one of the biggest banks in the world, probably top 5 or lower. They have made it so it protects that movement of the dollar to crypto more. But again, what USDC and other crypto companies want to do is create their own banks, because even those top 5 banks are still doing what the Silicon Valley banks and the other banks were doing, which was taking your money and investing it so they don't have it on hand. What the crypto market needs is for it always to be on hand. They don't need for it to be going and being invested even more. They just need it on hand. So by creating their own bank, they can do that. So that's what I believe is going to happen. Who knows how fast, but that's the path everything is going towards.